we'll start in no time at all. Beautiful afternoon, so thank you for taking the trouble to join us instead of being outside in the sunshine. At least it's sunshine here in London. I don't know about what it's doing where you are. Okay, so for those joining us, I'm Martin Sherwood, and this is Stephen on my
Hello, everybody.
left here.
Nice to speak to you.
And I'm from Enterprise Investment Partners. Stephen is from Startup Funding Club. We actually share the same building, so we're speaking to you from where we are in Bloomsbury in London. Okay, so just another minute while we wait for stragglers to join us. What's the time now? We'll give it one more minute. I think there are a few more joining us. Okay, well let's make a start. So welcome everybody to our webinar this afternoon. The subject is investing in the Seed Enterprise Investment Scheme. We call that SEIS, and we shall be calling it SEIS during the course of this 30-minute webinar. It is running for 30 minutes, and it is CPD qualifying, which I think you all know. So we'll touch on that again in a moment. So it's mainly about what SEIS is, what the tax reliefs are, how to invest in SEIS, what to look for in a SEIS manager, etc. We're also going to cover just a little bit of our own scheme that we're promoting at the moment. So I'm Martin Sherwood, and Stephen Page, welcome.
Hello, everybody.
That's Stephen. Let's move on. I am required, for compliance reasons, just to bring the key risks to your attention. So I'm going to rattle through these very fast, if you bear with me. Your capital is at risk, and you may not get back the amount invested. You should only invest if you are likely. You should not invest, I should say, if you are likely to require the capital in the short term. Past performance is not a reliable indicator of future performance. Any stated returns are for illustrative purposes, and no forecast should be implied or inferred. The legislation can change and depends on personal circumstances, and tax reliefs are dependent on the company or companies maintaining their qualifying status. So thank you very much for your patience there. Now just a tiny bit of introduction on Enterprise for those who don't know us. We are 6 years old. I and Christian, my business partner, we used to be at Smith & Williamson, a very big firm in the city, and we left to set up Enterprise. We wanted to be much smaller, and we're now a staff of 8. When we went on our own, we decided we needed a few differentiators to differentiate us from the rest of the market. We can sum those up quite simply by saying our policy is to stay with throughout the process. So it's a 3-part process, if you like: the money, manage the money, and exit the money. We believe in being totally transparent in all our dealings, so we like our investors to know exactly where their money is going, if you like, the complete reverse of a blind fund structure. And last but not least, we believe in only engaging with top quality asset managers. Here is one such this afternoon. That's you, Stephen. Right. Now, Stephen is going to give you a tiny bit of background about Startup Funding Club, and then we're going to move on to a general discussion on SEIS.
Yeah, very briefly. My background just initially is as an entrepreneur. And like a lot of exited and successful entrepreneurs, I started to invest into new companies, startups, and brand new businesses about 5 years ago. Out of that, I started and founded the Startup Funding Club in, I think, 2012. And we now are the leading angel syndicate in the UK. And we operate both funds, SEIS funds, and an angel investor network. As you can see on here, we've got a number of successful businesses that we have invested in already, and most importantly, we provide a whole infrastructure of value-added support and post-investment services to our companies, because of course they are only starting when they get the investment. You know, they need a lot of support and help post that, which is what we provide. To date, Startup Funding Club has invested about £10 million through our own funds and our angel network, which is £6 million from private investors and 4.5 from the funds. That has leveraged up, because a very important point to make here is that SEIS is the first funding for companies, and that they will need follow-on funding. So our 10 million has been leveraged up to about 40 million in post-investment funding through our partners. As you can see at the bottom there, those are partners for our food and drink, and they're quite wide-ranging. They will help these companies in their post-investment activity through mentoring, advice, business development, and all things such as distribution, getting them into places like Waitrose and so on. These are some of our success stories to date. There's a number of food and drink ones here, but I'm going to just very briefly talk about Onfido. One of the important things about SEIS is that all companies have to go through that, or most companies go through an SEIS round. Onfido was one that we invested in 3.5 years ago. The valuation of the company then was 600,000. Last year that company was valued at 50 million. So lots of great opportunities can come out of investing at the SEIS level.
Program is I'm going to do a bit of technical talk on SEIS, and right at the end of the 30 minutes we're just going to touch on EPICURE, which is the SEIS fund that we're working on. That's Enterprise and Startup Funding Club, and it is actually a specialist food and drink SEIS fund. Extremely interesting, first one there's ever been. Okay, so just a little bit of stuff on SEIS then. SEIS was launched in April 2012, so that's almost precisely 5 years ago, with the aim of boosting entrepreneurship. So it was at the height of the recession still. It was Osborne who introduced it, and it was a stimulus to investing in small startup companies. 175 million was raised in the last full year for which we have the figures, which was 2014-15. We think the amount raised for 15-16 was about the same. So to put that in context, it's about 1/10 or 10% of the size of the total EIS market. So it's really quite significant. Over 1,800 of these companies were raising funds for the first time. So the over on the left-hand side there, the blue boxes show the number of companies raising funds for the first time. Hardly surprising, really, because there's a limit of £150,000 which you can raise for a SEIS company. So it's usually brand new companies are the ones that which are available for investment. So secondary or second rounds of investment in SEIS is not so common. Now the tax advantages, I'm assuming that some will know these backwards, and perhaps some of you will not know them so well. I think it's worth going through them. So first of all, it is a 50% income tax relief. So that's 50% upfront way of a relief, and that is effectively it's a tax certificate, and that's, if you like, a discount or a credit against your tax liability, your income tax liability. Now, very important is the capital tax reliefs in SEIS, because they are different from the EIS. So you get half, if you like, of the total CGT benefit is a complete write-off. So it's a total exemption. It's not a deferral. In the EIS, it's pure deferral. When you invest through CDIS, it's half exemption and half deferral. You also get a freedom from capital gains, of course, on any profits you make from your investment in SEIS. You also get loss relief, which is extremely valuable. I'll come to that in more detail in a moment. And you also, of course, get inheritance tax relief, which is similar to EIS. So after 2 years from the date of the issue of the SEIS shares, they fall outside an individual's estate for inheritance tax purposes. So this is another slide explaining the tax relief. So we've got here 3 examples. Over on the left-hand side is the investment, so £1 if you like, or 100k, or whatever it is. In the middle one, we've got what it looks like if you get a 50% return, so 150% back for your 100% invested. And then over on the right-hand side, we're just showing what the effect of total loss is. Now, we're not aiming to make losses. However, you have to understand that in the nature of these investments are highly risky, and it is possible there will be some complete failures. Hopefully not more than the odd 1 or 2. So over on the left-hand side, then the mid-blue box is the tax relief you get, which is 50%, and then you've got your 2 lots of 14%. One's an outright relief, and the other is a deferral in the way we just described. And then finally, there's loss relief, which is the yellow band there. So that's if you make a complete loss. And then if you make 50% gain, obviously there's a lot of blue there, so there's a lot of tax freedom. So you get your 50% tax relief at the outset, and the 50p on the £1 investment that you make in profit is entirely free of tax. So this is very, very loaded in favor of the investor. So if the investment is successful, there's freedom from tax, and if the investment is not successful, there's a lot of relief which is available. So as I say, it's very loaded in favor of the individual. Over on the right-hand side, we've got what happens if there's a complete loss. So the 22.5 is assuming a top tax rate of 45%. So that's 45% times 50p, which is the net cost of the investment, which is therefore 22.5, plus of course your capital gains relief there of 14. So that means that you your net the net cost in that instance is 13.5%. So that's an amazing net cost. That's when you take advantage of all the tax reliefs. Okay, if any of that's not clear, I'm happy to go over it again if you would like to send in your questions. I should have said at the outset, please email your questions in. We have a colleague standing by just over in the corner who will be printing them out and bringing them in to us. So we'll be able to deal with those before the expiry of the 30 minutes. Moving swiftly on. These are just a few do's and don'ts now in SEIS. So I'm often asked, people will often ring up and say, I want to, I'm forming a SEIS company, can I get tax relief myself? Well, it's very technical. These are called the connected party rules, but broadly speaking, you can be a director, but not an employee. So if you're a full-time employee of the company, then you do not qualify for the relief. If you're just a director, an investor and a director, then you do. No single investor can control more than 30% of the shares of the SEIS company. That's an extremely important rule, and that means throughout the period of raising money, you must breach the 30%. So sometimes people ring up and say, I've actually put in my 30,000 and we've only got 50,000 already issued, at which point I say, stop, you've already breached the rules. So at any time during the fundraising, you must make sure you do not issue shares to any one individual for more than 30% of the total. Now, SEIS companies must be new businesses, and that's defined as being no older than 2 years old. They must have fewer than 25 employees, i.e. 1 to 24, if you like, and they cannot have net assets of more than £200,000 before SEIS money. And finally, we mentioned this already, but there's the cap. It's a lifetime cap. You cannot raise more than 150,000 for a SEIS company. However, recent relaxation in the rules that we lobbied for through the association means that you can raise SEIS funds alongside EIS funds. So if you're doing a fundraising, say, of 500,000 for a company, the first 150,000 can be SEIS qualifying, and the next 350 can be EIS qualifying. So it's quite useful to use that as an early bird or an incentive to get the investment in quickly for the SEIS qualifying shares. Moving on, this is just, I won't dwell long on this, it's just a simple comparison between SEIS and EIS, and broadly speaking, they're the same, apart from the treatment of capital gains, which we've already covered, and the fact, of course, that you get 50% income tax relief with SEIS, only 30% with EIS, and your maximum investment per year per individual in SEIS is 100,000, and in the EIS is £1 million. So, and obviously for married couples, it's 200,000 in SEIS, but not in one company, because that would be breaching the 150, and £2 million in EIS. Now let's move on, because I want Stephen to join me in talking now more about in a SEIS manager. So what qualities make a successful seed EIS manager? Stephen.
I think I would say that we've been doing this for 4 years now, so track record, which is the second point, but experience of being able to select the right companies to invest in is crucial, because at the end of the day, we are investing into the best companies we can find. So we get applications from up to 2,500, maybe even 3,000 a year. We whittle those down to physically seeing about 250, and then out of those 250, we probably see somewhere in the region of we then select somewhere in the region of 30 a year. We've invested so far into about 65 companies through our SEIS funds, and we are certainly, I believe, one of the 2 or 3 most experienced SEIS funds there are going around at the moment.
So talk to us about the mentoring side.
Mentoring and being able to work with these companies is crucial. If you think about what a company is, they are very young, not necessarily the people, but the companies are less than 2 years old. Most of them have not run a company before. They need a lot of mentoring, they need a lot of advisory services. We have a whole network and ecosystem of not just mentors, advisors, but also partnerships with service providers who charge very, very little, of course, but who really do help these companies. And that includes the close monitoring of the companies. We have board meetings with all these companies. So between the team at Startup Funding Club, we see probably out of the 67, we're probably attending 55 board meetings a month, which is an awful lot. But there is a team now of 10 of us, so we can split it out across that team.
And you can introduce professionals at very
we have a combination. Yeah, we have a combination of lots of partnerships in accounting, social media, where we set up joint ventures with people so that they could offer this very cheaply. We have partnerships with a range of people, IP lawyers, and so on and so on. So we've got this infrastructure in place to help these companies.
So I think the conclusion is the jury is out, but how do you think the SEIS market looks? Do you think there'll be some winners, or you're seeing them already?
Don't forget that I would say 98% of new companies that are looking for investment have to go through the SEIS route. They all start there. So there's a lot of successful companies. So the key is to find those needles in the haystacks.
Right.
And one of the great things about a SEIS fund is that investors end up with a portfolio of somewhere in the region of 10 12 companies. And so far, with our 4 portfolios totaling the 60-odd companies, we've only had 1 casualty. That's coming up to our 4th year. So, you know,
that's very good, isn't it?
I think it's pretty good. So, yeah. And I do think out of that lot, there's going to be quite a few stars. They're already starting to single out now.
That's brilliant.
Yeah.
Okay. I want you now, Stephen, just to talk a little bit about EPICURE, which is the fund that we're working on together.
Yeah, I mean, we have already invested into about 12 food and drink companies through our generic fund. So it was logical to put together a specialist fund with enterprise. And it's a big and growing, I mean, it's a massive industry, of course. And probably 20% of the companies that apply to us are some way from the food and drink and associated sector. So, you know, it's very logical. We've got some great companies already. Arctic Power, you can see on there, is one of them. They've been through a couple of rounds of financing now, and they're in Waitrose and places like that. So it's a very, very interesting, growing and changing market. A lot of trends towards healthy food, of course, healthy drinks. Most of the companies we're seeing now are very much in those sectors of health-based businesses.
So there's an enormous focus on allergies and low gluten-free and low allergy products.
We've got gluten-free bread, we've got sugar-free drinks, we've got sugar-free children's foods, you name it, sugar-free, gluten-free, powders, powders of powder. So there's a big trend, and places like Waitrose and Ocado are looking for these, and Holland and Barrett, they're just searching for these companies. And we've got in place partners that will open those doors to those companies. So a lot of our companies are already into those outlets.
Stephen, just tell us about your selection process. So you're approached by a food and drink company. What do you do?
Well, it's not in this order that you can see on the screen, because the most important thing of all is the team. And so when we see companies, we're looking at the team first and foremost. Do they have it within them to be entrepreneurs? Do they have the ingredients to be, whatever happens to them, they will persevere through the thin and thicks, or whatever the saying is, and make the thing successful. So we're looking at the entrepreneurs and the team first and foremost. Secondly, we're looking that obviously there is some product in place. It's not just an idea. We won't invest in just an idea. We need to see the prototype or the actual product itself. It needs to have the ability to scale. So what we mean by that it can be sold not just in Holland and Barrett, because it's a specialist type of food, but it can be sold across the whole of the UK channels, plus outside of the UK. So we've already got some of our companies selling outside the UK. OTs, which is a company of ours, and now just this last month set up distribution in Canada. So we're looking for scalability. We talked about experience, we talked about validation. So when people come to us with a product, we say, who else apart from you has validated this has any legs? So if they say, well, the managing director of Tesco's says this is fantastic and he's going to place an order as soon as we can manufacture enough, and here's his letter, of course we're interested. So third-party validation, external endorsement, and uniqueness, always important. You know, there's no point coming out with another mousetrap. So, and a gap in the market. Is it going to change the way people perceive and be a bit of a rule breaker?
Okay, we need to move on a bit because we've got a couple more slides and we've got about 6 minutes left. Conclusion then on EPICURE, substantial experience and track record of Startup Funding Club, a rigorous selection process, you were just hearing about that from Stephen, network of supporters and mentors, and that includes Tesco and JC Deco, which I think you picked up on before. So Tesco's have got a campaign called Back It, which effectively means they will put startup food and drink products on their shelves of a number of their stores. So they will give a shelf space to trial new products. So that's their payback, if you like. JC Deco is that huge international advertising business, and they also will give free advertising space as and when to startup products. So they give that's their contribution to the startup industry.
And I would just add there that we've got great partners in the accelerators and partners such as Grocery Accelerator, where people like John Stapleton, who is the founder of the soup company, Covent Garden Soups,
Right.
you know, people like that helping us with moving these companies forward.
Good. I think the next slide, this is the final slide before Q&A. This is just housekeeping on EPICURE. So we're looking to raise up to 5 million. The minimum investment size is £10,000. The minimum subscription is £1 million. And advisor charge is facilitated closing the 3rd of April because we need those 2 extra days to make all the investments, which is a nightmare time for you, isn't it, Stephen?
Yeah, but we've got them lined up. We've got a lot of companies,
Right.
good companies lined up, ready for investment.
Ready to go. So we're just looking for the rest of the funding to come in. Exit time frame is 5 years. We have put a target on this. We think it's reasonable to expect something like £1.20 back for an investment in this fund. So that's what we're stating as the target return. Okay, so how are we doing? Got about 5 minutes left. Does anybody have any Q&A? And if so, my colleague will bring the questions up to us, and we will read them out and try and answer them.
Indeed, we'll try.
In the meantime, we'll fill the space. Is there anything else you want to add to?
I think the just the important thing to make about a SEIS fund is the risk is offset to a large extent by the fact it's a portfolio. As I said earlier, so a range of companies. So we would in EPICURE we will have a couple of drink companies, a lot of food companies, maybe healthcare, health-oriented food and drink companies. So we'll have a broad range of companies. One of the key ways of mitigating that risk.
Okay, I've got some questions here. Jonathan has asked, is the initial cost taken from the gross investment? So the answer is the fees are paid to companies, so that does not erode an investor's gross amount for tax relief. So if you put in £10,000, you get your tax relief on £10,000. So that's a clear answer to that question. Rob has asked, how does your company and the wider industry view SEIS and EIS investment in film and media companies? The risk is without doubt higher than investing in food, but the profits could be very beneficial. Well, the answer to that is we are actually doing a media fund as well. It's not a SEIS fund, it's an EIS fund. And there's a webinar for that next Tuesday. So, Rob, if you're free next Tuesday at 2 o'clock, we'll be covering that. But yes, media can be extremely successful. And what you also get in media, which I don't want to dwell too much on media, what you also get is pre-sales and production credits, which can pretty much protect you, so it's a capital protection scheme effectively. So that's next Tuesday at 2 p.m. How much, Jonathan's asked, how much has been raised so far? Well, we've got £500,000 and we've got pledges for quite a bit more. So the thing about SEIS money is it always comes in the last few weeks of the tax year. People tend to do VCTs first, EIS is second, and SEIS is right at the end. So it's looking quite reasonable at the moment. So Ian says, my understanding is that you can't have a pre-planned exit. You mentioned an exit in 5 years. Isn't that against the regulations? Oh, Ian, it's simple. The answer is you can't have a legal or a contractual arrangement in place to provide an exit. So when we say we will exit in 5 years, that's an estimate. So we as the managers are saying we hope to exit in about 5 years, depending on how the different investments have done. But in reality, you might, if we have 12 investments in the portfolio, we might have exited, say, from 8 of them, and there might be 4 others where we're hanging on because certain developments within those businesses, we just want to sit that one out, as it were. So the answer is it's a slightly fragmented exit. It doesn't all exit all at one go. Any more questions? I think those were the main ones we've had so far. So, how are we doing for time? 14:30. That's amazing. We will sit here for a few more minutes. So, if anybody else wants to type in a question, please do so. We won't run away for another 5 minutes or so. For the rest of you, thank you very much indeed for your time and attention this afternoon. I hope it was of some interest. If you have further questions or you'd like to contact us, there is a contact form there on your screen at the moment. That's my contact details and Stephen's contact details. Send us emails, ring us up. We'd be delighted to hear from you. So thanks again. And as I said at the beginning, you will get CPD points for attending this webinar this afternoon. And as I also said just now, we've got another webinar on media next Tuesday. So thank you so much, and look forward to seeing you again. So we'll sit here for a minute or two.
Wait for any more questions.
Any more questions?
We want some nice, challenging ones. Pity we can't ask them any questions.
I know.
Oh, it's so strange to do it. We can't ask you questions because we'd say, who's invested so far into an SEIS fund?
Yeah.
We can't hear the answer.
Just a minute. Okay, there has been a last question from somebody. Do we have a commentator review? The answer is no, but none of the SEIS offers do. So I think I'm right in saying hardly any of the SEIS offers are reviewed by researchers or commentators. They just don't touch them. They've got their hands full doing VCTs and EISs and EIS funds. So the answer is I don't know of any SEISs which have commentators reviews. Do you?
I think they maybe at the beginning of SEIS, some of them came into the market and did that, but it's not easy because it's so early that to look for track record, for example, it's just too early.
That's a very good question here from Ian. Ian, are you still there? How do you deal with dilution when EIS shares are issued? I've seen several cases where an investor's share has been diluted by an EIS raise and they have never recovered.
Well, I would say that example must be where the company was not doing very well. So obviously, investors are always diluted by a subsequent round unless they follow on themselves. So it is inevitable, but part of the job that we're involved in is to also manage that follow-up investment and to ensure that the best interests of those early investors are looked after.
In general, do you believe in chasing the investment, reinvesting, or
I think
not?
If it's possible to do so, yes. As I said earlier, we do stick with our companies, and we are, we have, as I said, we're meeting our companies all the time, all of them. So we know exactly what's going on with the companies. And, with our terms and conditions, we can effectively veto any further investment if we so wished. We would not do so, but we would certainly make sure that the interests of our investors are looked after.
So would you say it's a judgment call?
It's a judgment call.
So sometimes it's putting good money after bad.
Yeah.
And other occasions it's sensible to follow on invest.
Definitely, and I would say, as I say in the example, if it was a big dilution, then it can only be because the company wasn't doing well. So, that will be the case. But in other situations, I mentioned earlier about Onfido, where we got in very, very early on such a low valuation, which has gone up now, multiple times, and we've been diluted. We've been only diluted maybe 40%. So
that's exceptional, though, isn't it?
It is exceptional, but so is also a big down round. Hopefully that doesn't happen.
I don't suppose we've got many viewers any longer, Stephen. So
have we not? Yeah, there's still.
Oh, there's some there?
Yeah, there's still some there.
Okay, I can't read. My eyesight isn't that good. Okay. So we're happy to sit here for another 5 minutes if you want to send in more questions. I think that we enjoyed this discussion. We hope you found it interesting. I find the whole science, if you like, of investing in SEIS extremely interesting, and I've been impressed really in recent years working alongside Stephen and his team to see how much they work closely with a group of monitors and nurturers and co-investors. So you need a team, enthusiastic team of supporters really to get these small companies off the ground. If it's just one entrepreneur doing it on his own, it tends not to be so successful. Sometimes it is, but you really need a kind of team effort. Is that?
Yeah, and one of the reasons we set up, we also set up our angel network, which has now been established for 3 or 4 years, with well over 300 angels, is that they can bring their expertise to helping these companies. So, best model of all is a co-investment one, where the fund invests and angels invest. Those angels are quite often from the same industry or sector as the companies, and they can provide that very high level of guidance and advice and expertise. I think out of our 65 companies, probably 20 have board members who are from our angel network, you know, who are from the industries that those companies come from. So nothing better than that.
How many watchers have we got left?
15.
15. Okay.
15 people are left standing.
So I think we're probably going to leave you now, aren't
we?
Yeah. So listen, everybody, thank you very much. I hope you found this educational. That was the key point. Informative and entertaining, hopefully as well. So thank you so much for joining us this afternoon. And as I said before, please don't hesitate to be in touch by email or phone over the next few days and weeks. And good luck with everything. Thanks again.
Thank you. Bye-bye.
Bye.